Hello, it is a new year. One of the things that happens in the new year for most businesses is that they are reviewing performances of the previous year. One of those performance that will be reviewed in this year, vis-a-vis what happened or what strategy that was set, will be the financial performances. In this video, I'll be showing you how to review reports in Xero and also be showing you how to create basic budget for the new year based on the report that you have reviewed. Let me start by saying that reports are not magical. Reports are usually results of very purposefully driven activities in an accounting system. Reports usually are to answer questions. These questions are supposed to have been set before you are looking for answers in the report. Therefore, when we get businesses telling us that they don't understand or the questions they want answered are not in their report, usually what causes this is because they've not set out the accounting system to answer those questions when they need those questions answered. Questions such as how are we performing, what are we spending money on, which areas are we making money from, are usually set before you now start looking for those answers from your financial statement. For the response to your questions or the answers to your questions to be meaningfully answered, you must have a purposely driven an accounting system. Please note, an accounting system is not the same thing as an accounting software. Usually, businesses, accountants sometimes confuse the two and or use them interchangeably in discussions. Now, accounting system is a function of three basic drivers. One, accounting system or the basis of capturing financial transaction, which can be either Excel or accounting software. Two is practices that you have set out in place. And three, which is also very important, is the capacity and the experience of the driver of these two. The driver of these two can either be you as a business owner or an accountant, driving how the accounting software is and also the practice and procedure laid down to be followed. Now, first, let's talk of accounting software. Yes, I know that there's businesses that use Excel to manage transactions. You need a lot of understanding of use of formulas to be able to get the best out of it. At the moment now in the market, there are a lot of softwares that you can use. I'll prefer you use a software rather than Excel. There are desktop softwares, there are server-based softwares, and there are cloud softwares. Some are free, some are paid for. In Pillarcraft, we prefer cloud softwares because it gives a lot of advantages. One is that it allows you to work from anywhere and reviewing your financials from any device. Yes, the usual excuse we get for that is because they are usually subscription based. Note there are some free ones, they may not be that robust, but the robust ones actually comes at a subscription. And most businesses always have the excuse of saying that we can't pay for any subscription based software. I usually used to say to them, the benefit outweighs the cost 1,000 to 1. Now, in Pillarcraft, we prefer Xero. Xero has tons of features that will help businesses not just capturing their financials with transaction, but also be able to understand how the business is performing. Now, let's now go to the standard practices that you may need to adopt. Like we said at the beginning, report answers questions. Therefore, for you to answer these questions, you must have the end in mind. Let's give an instance. If, for example, you want to answer the questions of how much or what you have expended on social media ad as part of your market expansion or market penetration strategy, it means that you need to do some things in your accounting system to be able to get out a report on what you have expended, then use it as a basis of comparing other things in your accounting software or accounting system. The starting point for a good accounting software management accounting system is that you must form the practice of setting out the end in mind with your plans. Once that is set, it means that you have decided on what you want to measure in your financial system, and then you set out to create buckets for them. Now, in an accounting software or accounting system, that is called a chart of accounts. The chart of account basically is set out those things you want to measure in what area. Now, Xero has a default chart of account. However, your chart of account will be a function of the industry you belong to, the sector of the industry you belong to, the stage of your business. Generally, in terms of your business, are you a startup, are you a growing business, or are you a mature business? And also the strategy that you must have set out and the goals. Usually, there are no two set of chart of account that are the same because business plan strategies are different. Now, having set out a clear chart of account that is intended to measure and give you those answers that you want at the end of the financial year, the next thing you need to adopt as a process or procedure is ensuring that you have a standard bookkeeping practices in place. A bookkeeping practice will ensure that you are consciously capturing and consistently managing transactions in your accounting software. This means that you will capture and properly categorize transactions as they occur in your accounting software. Thirdly, for you to get the best out of this is that you must perform what we call an end of the year procedure. End of the year procedures are those things you need to do at the end of the year to now be able to make sense of your financials. Now, you could do this also, this same procedure at the month end also to achieve the same objective of reviewing your financials on a month-to-month basis or on an annual basis. I'll be demonstrating those year-end procedures using Xero and this particular demo organizations in Xero. Please note that I'll be using a demo organization. Demo organization in Xero only has 3 months of transactions. So you will not have an annual transaction. But whatever I demonstrate to you using those 3 months, you can actually extrapolate it and use it and do it for your annual financial state. So what are those procedures? Number one is that you want to ensure that all your bank statements in Xero are reconciled to date, if not to date, to the last day of the year, the end of the year. So in this instance, for example, we know we have uploaded bank statement to January 2nd in Xero organization. We want to ensure that reconciliation of bank statement is done to 31st of December of the previous year. Why is this important? Because transactions in bank that have not been reconciled has a direct correlation to what is stated in your financial report, how complete they are and how accurate they are. And I'm going to demonstrate this by talking about the next step. So the next step is that you want to review your receivables and payable, as the Xero will call them, invoices owed to you and the bills you need to pay, basically reviewing if they are complete and they are accurate. Complete in the sense that you can basically, as a business owner, as an accountant, you have idea of transactions that may have occurred during the year that you can basically look through your invoices. Is any invoice missing? Before you proceed to do that, I would advise you must have reconciled your bank statement. So let me demonstrate the reason why I said you must first reconcile your bank statement to date. So let's go into the bank statement. Now, this video is not about showing you how reconciliation is done in Xero. We have another video to do that. This is basically just illustrating why you need to reconcile your bank statement to date. Now, we are actually at paid invoice 25. Let's mark it. We have actually been paid for invoice 25. Let's mark it as paid. And we also paid Trexton property. Let's mark it. Let's reconcile it. We noticed that the bank fee was charged. We noticed 7-Eleven, and then 30th of we made payment to Gateway. If we go back to our dashboard, you will notice that our invoices, the value of what we call amount receivables has changed drastically. So it means that we have now recognized those transactions. This is why it's important that your bank statements reconcile to date, if not to date, to the end of the year. Now, so having concluded that, the next thing you need to do also is that you need to run depreciation. For you to run depreciation, you need to go into your fixed asset module in Xero, which is also one of the advantages that Xero has over other software, is that you have the fixed asset module already embedded in the same subscription for your accounting software. So first is that you must ensure that all assets are registered in your system. Two, you must also ensure that your depreciation start date concurs with your year end. So now we want to ensure that the depreciation is actually 2021. So we go into the fixed asset, register the asset, and then we run depreciation. We want to run depreciation to the end of the year, which is 31st December 2021, and then we'll confirm. Now, what Xero will have done at the back end is that Xero will have performed the journal entry between your assets and your profit and loss account. Will have done those journals by posting depreciations for you. Having done that, the next thing we need to do is that we need to ensure that our inventory physically, if it's a business that is managing inventory, that the inventory figure matches what we have physically. So we must perform an inventory count. Now, please note that it's possible your business, one, is not managing inventory, two, your business is not managing inventory in Xero. Now, if your business is not managing inventory, you may not need to perform this step. But if your business is managing inventory but not in Xero, you will need to perform stock count and then adjust accordingly either in your inventory management software and then also come and do the journal entry in Xero to match. Let's say, for example, we add perform our account and we notice that the large t-shirt was actually 4 physically, while the medium t-shirt was 5 physically, but the system is saying that maybe there was a mix-up, in the counting earlier. So we go into it and then we create new adjustments. We want to decrease this quantity and we want the date to be December. Please, it's important. December 21st at the year end. We want to do it as at that date. And then we want to send it into as part of our, should I say, loss, click on sales. You may also need to create a new chart of account to record it depending on your preference, and we want to call it theft. Or as we say that time, let's call it mix up. Yep. And we'll post that. So Xero is going to post the adjustment for us. Now if we go back, that has been decreased. Let's now go, you can see it has been decreased by that figure. Let's now go and do the shirt, the medium shirt. So let's increase it by 1. We want to send it to the cost of goods sold account. We say it's mix up. Post the adjustment and it's been done. Now let's go and change. If you have done you can also do what we call adjustment of your prices. So in case you have items in your store and you feel that the value on the market is different, you can actually recognize your loss. Now, so having done those counts and all that, one of the other things you need to now do in Xero is that you need to do what we call accrual and prepayment. Now, what is accrual and prepayment? Accrual and prepayment essentially is recognizing either expenses that you have incurred but has not been recognized in your financial statement, that is accrual. Then prepayment are those expenses that you must have paid for that relates to period after. So let me give you an instance. So let's assume that you made a payment for rent of 1.2 million naira at 100,000 naira per month, but the money was paid as at October of this year. What invariably means is that you will have, yes, paid for the money from your bank account, but part of that payment that you may relate to the next year. If you recognize the 1.2 million in this year, it's going to have a distortion of your net profit of your business. So what you need to do is to do a journal to move the amount relating to the next year into the next year and leave the one that relates to this year in this year. That is called prepayment. Now, accrual is, say, for example, you had incurred a service charge already. However, your landlord or the premises person has not sent you the invoice, but you know that you are due for it. So if you do not put that as part of your cost, you'll be giving yourself an erroneous ratios of how you are performing. Well, like I said, this video is not an accounting. We have another video that shows how to perform accruals and prepayment. Once you have completed these major processes and procedure, now you have a report that you can review. Xero has tons of reports in it, and for you to access your report, go under accounting and reports. Xero has tons of reports. This report, Xero has kind of segmented them into the ones that relate to financial performance, the ones that relate to financial statement, the one relating to payables and receivables, payroll, reconciliation, taxes, and transactions. However, we'll be focusing basically on two reports in this video. One is the profit and loss, and the other one is the balance sheet. Profit and loss, otherwise called statement of financial performance, and balance sheet, otherwise called statement of financial position. So let's open up our profit and loss and perform a basic review on it. Please note, I keep saying that what we're doing here is a basic review, not a very detailed one. For us to review our profit and loss, first, Xero allows us to do our profit and loss based on months. So we want to do it, we want to first have it as at December 31st. And you can actually have it based on the periods, say from January. Like I said, this particular demo account does not have transaction, but I'm going to select it to show it so that you understand that you can have the previous period from December all the way to January. Now, what this does to you is that it gives you analytical review month to month. Now, what this gives you is it's going to highlight to you the months you have spent more money and the months you have spent the least money on a particular transaction. And you can do a bit of query. For example, you could see that we have entertainment. We had 1,500 is so different from what we have from the other previous month. So we want to go in and review if what was posted there should be there or not. So we open up, right click and open up in another window, and then we review the ledger for that month. And we notice that, okay, there was an amount we deposited for a function for hire for a client event. Now, this event has not taken place. We only deposited it. The question is, does it relate to this year or next year? Now, let's also go back and review other ones. You can see we have rent, we have advertising. What caused the advertising to shoot up? In December, we noticed we had prototype, media banner, mock-up, and all those things that was done. And we have 50-second still frame and ad shown in that we produce. Now, is this supposed to be an asset? Can we amortize it over a period? Those are the kind of questions that your accountant may need to answer and decide on. Having done that, we can review also based on month basis. Let's do the month and see how we performed in terms of the month. And then with this, let me not make it 11 periods. You can actually do a bit of ratio. For example, what was our gross profit vis-a-vis our turnover? These are gross profit vis-a-vis our turnover. What is the ratio of our spendings against our turnover, and all those kind of ratio analysis. And then you'll be able to have an understanding of how you have performed in the year. Now, usually I advise that for profit and loss account, you do month to month kind of review. You review from January to December, line by line, to have an understanding of it. Now, one of the things that this does to you is also to refresh your memory of those things you did during the year, some mistakes that you must have made, some expenses that you shouldn't have incurred, and or what you could do better in the new year coming. Now, having reviewed that, the next thing we want to review is that we want to review our balance sheet. Balance sheet will basically tell us who owes us what, while the profit and loss will essentially show us what we have expended in which area and where we have made money. So we'll be able to review that what we owe and what is outstanding. And if there's any amount that doesn't make any sense, you may need to go into your listen to go and review it. Now, I could see off like we have a negative figure on our inventory account. It means something is off there because inventory should not be a negative figure. But apparently, it's because of the posting that we did that we have a negative figure in that. So we may need to go and do a correction on that. Like I said, this is a general review of your report for the year. So what questions is this and is this report is it answering for us? Is answering, for example, let's go to our profit and loss. Answering for us what we have expended money on for the year over time, those areas we spent money on and how we made money. Let's go and review our sales, for example. Now, you will notice that in the sales, let me review the sales for the month. No, I want to review the sales for last month. Last year. You can see that this business had made money from monthly support, trainings, workshops, selling of books, and they've put everything under sales. Now, this may not answer the question on which area, where do we make more money from. So it's important that you set out your chart of account to be able to answer those questions. So now, having reviewed this basic report, these two basic reports, and doing, like I said, a basic review on them, the next thing that you may need to want to set out a budget for your coming year. Now, Xero has in it a wonderful budget planning module that can help you set out budget for the year. Now, so if to make a budget in Xero, what number one is that you need to add a new budget. Let's now say we are making budget for the year 2022. Now we want to have the actuals for the 3 months, and we want the budget to start for 3 months. So let's update. Now what Xero will do is they're going to bring transactions from the previous month, which is October, November of 2021, and then give us basis of making budget for 2022. So now, so for example, we notice our bank fee is about 15 every month. We can easily extrapolate that into the months to come and say a fixed amount every month and apply, and Xero does that. We also notice that our consulting is $29. We can easily create that. Apply. Now, we may plan that what we're saying is that, our sales is about this, and we can do an average. 8 plus 13 will give us 21 divided by 2, or let's say 3 and we say we want to have a 7,000 income that grows by 100 every month, and then we applies it, and then Xero will basically help us create our um, sales target for the month. Now, please note, like I said, this is just a basic budget procedure. Setting out your budget, there's a lot of drivers to it. Apart from what you expended, what you spent, or what you received last year, it's also a function of your strategy, your goals for this year, what you're going to be focusing on in this year. That will drive what you're going to be making and what you'll be spending money on. This is basically to give you an idea of how budget is run in Xero. We have other videos where other webinars that we have created for business owners where we actually went through how budgets are created and how budgets are reviewed in the year. I hope I've been able to show you how to review your basic report. I've been able to show you those processes that you need to adopt to ensure that you have a meaningful report in your accounting software, and how you can create a budget for this new year. So, on that note, I say good luck to you in this year. We actually wish you well this year. Thank you for your time.